Shares of the trucking firm XPO are on track for their best day since April after an earnings beat on the top and on the bottom line. The company's less than truckload or LTL business seeing a boost from the bankruptcy of rival trucking firm Yellow, which had accounted for about 10% of that market. XPO is up 150% since spinning off its RXO brokerage unit about a year ago. What is the state of freight now for the fourth quarter and beyond? Joining us now, our in-house freight expert Frank Holland, along with XPO CEO Mario Harik. Welcome to both of you. First of all, I really appreciate you guys being here. And it's a lot of important things happening today. Your earnings, a nice stock move. You said, Frank, the one-year anniversary of him taking over. How are you able to execute during this extremely challenging freight environment? Is it just market share gains from the struggles of some competitors?
Well, Kelly, we had a great quarter in the third quarter, and the team executed really well. So we've been improving our efficiency over time. So we were able to handle more freight for our customers, more shipments, higher prices, and importantly, record service quality. And we're excited about that for our customers as well.
Mm-hmm.
So, Mario, Kelly just referenced it. A year ago, I talked to you when you took over as CEO of this company, became a pure play LTL company. I want to dig into some of the numbers. We're showing them to the audience right now. Pricing up 6.4%, tonnage up over 3%. We call it volume here, just to simplify for the audience. What was the catalyst for those gains?
Well, starting first with pricing, the big catalyst for these gains has been our improving service product. We exited the third quarter with a company record and service quality for our customers. And when we invest in service, our customers are willing to pay a premium for that. And we've seen an acceleration in price associated with it. On the volume side, a lot of that went through the Yellow bankruptcy or ceasing operations in the third quarter, where we saw they were 10% of the industry capacity, and all that freight had to go somewhere, and we were able to take on more of that freight for our customers.
So you were able to benefit from the closure of Yellow. We want to talk about your customers for a minute. You have some blue chip customers, Ford, Dow, General Electric, a number of customers. Were you able to gain other customers? And what kind of customers did you gain?
Yeah, so we gained thousands of customers through the course of the year. And a lot of these were driven by these service improvements I just mentioned. Now, a lot of them were smaller customers. A lot of them were mom and pop shops. We call them local accounts in our business, that we were able to onboard thousands of new customers through the course of the year and grow volume with that segment of business.
So you talk about these mom and pop shops. Is that a higher margin business? Because today you actually made an announcement that kind of flew under the radar. It's part of why the stock's up. You believe by 2027, you're going to improve margin by 6%. You call it operating ratio. It's an efficiency metric. Lower's better in this case.
Yeah.
And you believe you have 6% of improvement in the next couple of years. How are you going to make that happen?
Well, Frank, first, we say at least 6%, because our goal is to actually get to a higher number. And we want to get our operating ratio in the 70s over time. Now, we're going to make that happen predominantly through three main levers. One is around continuing to improve our pricing or yield over time, driven by service improvements. The second one is making sure that we lean into higher margin business and local account business that we're going to be growing. And the third area is around cost efficiency. Mm-hmm. You look here in the third quarter, we increased our shipment by 8% on a year-on-year basis. Yet our labor, our headcount was roughly flat on a year-on-year basis. And all of that is proprietary technology improving our efficiency as we go along. It's
fascinating to look at the performance of RXO versus XPO since the spinoff. I mean, RXO has been basically flat, and you guys are up 150% over the past year. And I'm not sure that's what people would have expected at the time, because RXO is supposed to be kind of like the tech, whatever you want to call it, piece of this. But can you talk about macro conditions? I mean, what is happening with the economy right now?
By the way, RXO is a fantastic company, but a lot of it is the cycle. They are in different cycle with the truckload industry. But from a macro perspective, we usually survey our customers on a regular basis, on a quarterly basis. And what we're hearing is that things are soft, but they are not improving drastically, but not getting worse either. I mean, one of the indices we watch for is the ISM Manufacturing Index, and it improved from the third quarter. In September, it was roughly 49, and usually it's still deflationary, but getting better.